Hi traders, welcome to Trading Week Ahead with me, Ken Calhoun, where you'll see my top picks for the week ahead. Featuring stocks and ETFs, you'll also get to watch my top Forex trading picks, plus see what's new with E-mini trading and more. All information is for educational use only. Don't make actual trades based on this. Instead, learn how to trade with me. Now, let's see what's going on in this week's markets. Hello active traders, this is Ken Calhoun with Trading the Week Ahead episode for the upcoming week for July 18th, 2011. Let's take a look at our broad market. This is the 15-day NASDAQ Composite. It's been selling off all of last week, so we are in a bear trend correction right now. This is not a good time to be aggressively trading either way, simply because we're in the middle of, or near the middle of this 15-day range. One of the things that I would encourage you to look for is breakouts outside of the immediate past box range here. I'm going to use 2830 as resistance 1, 2890 as R2. I will not be scaling into large size on longs unless we break that. I'll start putting on small share long pilot trades if we get over 2830. On the short side, which would be my preference given that we're in an immediate downtrend, let's use 2750 as support 1 and 2630 as support 2. Given that context is our broad market, let's go ahead and take a look at what's moving and some of the hot stocks and ETFs right now. Let's look at ATI. Allegheny Tech is a really good one from Friday. You can see this one had a 5-point move, so you might want to keep that one on the watch list for this upcoming week ahead for both intraday and swing trading. I like it for swing trading as well because we've taken out the 15-day high cut breakout. Another one, CDE, Coeur d'Alene Mines. Our mining stocks have been doing really well lately on strength of both gold and silver. So keep an eye on those carefully for potential trading opportunities. Both swing trading is fine. This chart's good. We're at a 2-day high breakout continuation and a very nice 15-day uptrend in CDE. My favorite mining stocks that I like to trade, Newmont's one, NEM. This one's got a good range here from 51 to 57. Not good for intraday, right? See how narrow the range is? So this one's no good for intraday trading, but fine for swing trades. So Newmont Mining, NEM, one of the good mining stocks here. And as always, we'll keep an eye on both long trades on new highs. And again, as you may have seen in my various trading industry articles, I like roughly 35 cents above new highs. For longs, we can look at potential selling under 56.3. ABX, the other mining stock I like to trade. It's because it's got a nice wide range, clean uptrend here. And you can see from 42.5 to 49, this one's taken out new cup breakouts. Remember, always be on the lookout for cups, gap continuations, and other plays as I teach in my educational materials. All right, next up, Chesapeake Energy. This one has a gap continuation. Remember, as I always teach traders, I like to go for gap continuations over 80% of the time because that's the way they usually break. Keep Chesapeake on the radar for this upcoming week ahead over the 33 high breakout. SWN, Southwestern Energy, another energy stock, same exact chart pattern, right? You can notice that this is another good quick mini lesson that stocks tend to move in sympathy with each other in sectors, whether they are internet sectors or semiconductors or what have you. In this case, we're looking at energy, SWN and CHK, pretty much identical chart patterns, right? And they're very strong, so keep an eye on those for potential breakout continuations next week. WNR, Western Refinancing, I believe is the name of that one. And we can see here that we've got our cut breakout taking on new highs, nice strong uptrend. As a trader, I want you to always be on the lookout for breakout continuations using the charts with nice wide clean ranges. And for our ETF traders, let's start off by looking at GLD. The gold long ETF continues to take out nice new highs here. Look for new long breakouts over, say, 156.5. And if you are long or looking for potential reversals or shorts, the earliest support line I would use would be the bottom of this gap or this window at just over 153.25. Also, FAZ, our financial short ETF, continues to move up here as our market is sold off this last week. We'll see if we're able to take out new highs. I would be cautious right here near the last part of resistance unless we're able to take out new highs over 51. Similarly, With gold, you can see that our silver long ETF continues to move up higher. This is SLV, the ticker. I'd be looking for new highs here over 38.8 and then again over 40.25. We'll see if that's able to take out new upside momentum. Selling no sooner than, where did I short this? I would sell it under, say, 36.7. I'd make it lose this congestion area right here for potential sell-off. And the only pivot play I'd look at would be for ZSL, the silver short. If silver starts to pivot and come back down in price, then this one will go up. Earliest I would look at for a long would be a small pilot trade at just over, say, 15.5. That would be high risk speculative. Better play would be over, say, 17.25 if we're able to recover this gap and break above this resistance line. 17 would be the first major resistance in this chart. And I wouldn't really be interested in getting long on any size unless we're able to take that out. And then again, of course, over, say, 20.8 if we're able to take out 15-day highs in the week or two ahead. And last but not least, keep an eye on Netflix for the upcoming trading week ahead. We had a sharp sell-off Thursday and Friday from 300 all the way down to 282 support. So keep an eye on this one for potential moves outside of this trading range from, say, the 280 or below for selling, or longs no earlier than, say, 306. For our E-mini traders, you can see that we've been in a choppy downtrend the last several sessions. A quick tip, and this is the ES chart, and a quick tip is to always pull up your S&P index chart and keep things in perspective to see whether or not our trading ranges are increasing or decreasing. In this case, they're decreasing, and we don't have any volatility on Friday, right? Summer Friday choppy day. The ADX, average directional index line, is down, indicating a consolidating market. We lost bear cup support, even though we recovered that into the close here on Friday. But overall, it's kind of a choppy down market, so I would stand clear, or at least be relatively conservative in your plays there. Some of our quick technical signals, you can see R1 is just over 1316, resistance 1, and support just under 1302. So keep an eye on breakouts outside of that range. My preference would be to be relatively conservative given that we're in a downtrend and go heavier size on selling under, say, 1301.5 if we get down there. If we do start to claw our way out of the selling pressure here, I would be very cautious about trading inside anywhere inside this region here from 1316 to 1330. You might want to wait for aggressive longs unless we're able to clear this 1330 major resistance. And finally, for our Forex traders, let's take a look at our current charts that are moving. Our cable looks like it's taking out new highs, right? The pound is doing well against the dollar with immediate resistance at the 162. We'll see if it's able to take that out on new highs. I would use a loss of this 1605 as the immediate support line. So just trade, look for trading opportunities outside of this range. This previous cut pattern was broken out, overtaking the cable to new highs. So this one looks like we've got a good breakout in progress. The only caution is our ADX line is declining, so that means that our volatility is low. It's been going sideways. So another good reason to do your due diligence and wait for it to break outside of this immediate support resistance region. Let's take a look next at our US dollar to the Canada dollar. Again, the US dollar is taking out new lows against whatever it's trading against. So the pound was doing good against it, and we are doing bad against the CAD. So keep an eye on new selling under, say, the 95 even. Earliest longs are obviously right over 96.4, right? 96.40 here. I'm going to avoid this range. We're taking out new lows here, and so our US dollar to the Canada dollar is a bearish pattern. It's a bear cut breakdown, so the right directional move would be to look for potential selling. I'd be more comfortable with that if and when our ADX breaks out over the 30 to the upside. So keep that one on the watch list as well. Euro yen, this is an interesting pattern because we have a narrow tight range consolidation that's likely to break out soon. The longer things go in consolidation like this, following a sharp move, the more likely they are to either break down in continuation plays. This would, the number one play would be a selling pressure one under, say, 111 would be the best initial sell. Secondary would be under these two hammers, right? The better play would be under, say, 109.4, which would be the best play for selling, simply because we're waiting for it to lose hammer support. Earliest pivot long would be over, say, the 113.5 above the high of this candle here. So 113.5. Again, I like the fact that with a sharp sell-off here, went sideways for 3 whole sessions, it's likely to move sometime soon. So keep an eye on this one, like a coiled compression spring ready to move up or down outside of this consolidation region like a pennant. Though this is not a pennant pattern, it's the same kind of buy and sell pressure in a box range when we look for new plays outside of that. Our Euro CAD making a bearish cup pattern, right? This is bear cup breakdown 1. Here's a bear cup. We'll look for selling under the 1.345, and obviously no longs unless we get back up over 136 or 1.368, the 1.368 line here in our Euro CAD. And last but not least, our US dollar to the Swiss franc. Again, our dollar is doing badly against all major currencies. I will refrain from making political commentary as to why that is the case. Anyway, here's a bear cup breakdown. Sold off. This is a good selling pattern. This is one of the strongest selling patterns because of the trading range back here on our July 13th day. So we'll see if this is able to take out new lows under this support line. Just under the 81 would be likely 807 or 805 down here for the sell. And I would not want to look for longs unless we get back over 83, right? Over the 0.83 here, just above that bear cup support line. So that's it for our currency pairs for the week ahead as well.